Well, and you hit it right on the head, Dylan. You've got to have somebody on the ground. I was invested in a deal as a limited partner on a property out in Tyler, and it's a great team. Well known uh, people that they didn't have anybody on their team that was local. They didn't know and understand that market like they thought they did. We ended up losing 91% of our capital on that deal.
Welcome to the Real Estate Pros Show, where we interview real estate investing professionals from coast to coast, as well as the service providers that serve the real estate investing industry. Our goal is simple: share what's working now to help you improve and scale your business to the next level and meet the pros that can help you get there. Real Estate Pros is powered by Investor Fuel, America's leader in helping real estate investors and professionals build the business you need to live the life you've always dreamed of. Let's start today's show. Property insurance for real estate investors doesn't have to be difficult, but it does need to be there to protect you when you need it. MyInvestorInsurance.com not only provides insurance at 15 to 30% cheaper than traditional agencies, it's built specifically for real estate investors like you. You can set up an account in about 2 minutes, get quotes on properties, turn on and turn off insurance for your fix and flip or rental properties in around 2 minutes without having to talk to anyone directly, all through our portal. There's no better way or faster way to make sure you've got the coverage you need to protect you, and no more lengthy policies either. Once you're set up, you're billed monthly and prorated by the day for however long your policy is active. It's powered by MSI, the third largest independent MGA, with 1.5 million customers and more than $1 billion in cumulative premiums written. Get set up today in about 2 minutes at myinvestorinsurance.com/fuel.
Hey folks, welcome back to the show. Today's returning guest, Shawn Griffith, is a multifamily investor in DFW with Kraft Capital Investments. Shawn, thank you for taking the time today.
Hey, Dylan, thanks for having me back on the show. Really appreciate it.
I'd like, if we can today, to really get into the weeds here about investing in multifamily deals, larger multifamily deals in DFW specifically. And we were talking before the show about really the scope of Kraft Capital in DFW. And because you're active out there, I think a lot of folks would really like to know, based on your experience, what good looks like. This hasn't been the easiest 5 or 6 years to be an investor really anywhere. If I can say this, like markets like DFW, which are more speculative markets, you tend to see the highs, you also see some of the lows. For folks who may be looking at, getting into larger deals, especially right now, things are changing. What would be some of the, foundational feedback that you would have investing in DFW?
Yeah, no, that's a great question, and there's about 40 questions wrapped up in all of that. Um, First, I would say that I would not consider DFW a speculative market. Um, I would say any market you're in that you don't know well is speculative. So part of investing in I have, me personally, I would never invest in California, but I have friends that do. They live there, they know the market, they live and breathe it every day. So they know how to reduce the risk as much as they can in a market. So that's, to me, investing is learning about the risk and knowing what your personal tolerance for the risk is. So I say all of that to kind of lead into, you got to know your market. And that's why we at Kraft right now stick with DFW. It's our market. We know the market. We have great broker relationships here. We have great relationships with our lenders that we use. They know where we're focused. They know what our deals are. At some point, maybe next year, I don't know, depends on how this year goes. If this year picks up and we pick up, 3, maybe 4 deals this year, we might branch out into a second location. But part of why we're successful here is our team is here. We're on the ground here. We can walk up and see the units. What I would say to somebody new that's getting started, um, while you don't have to invest where you are.
Stop living on an island and join the #1 mastermind in America for professional real estate investors. Investor Fuel is a community of hundreds of the nation's top investors working together to build stronger businesses and better lives. In addition to the amazing community of real estate investors acting as a board of advisors for one another, Investor Fuel members have access to 100% funding on purchase and repairs for our members only, a health insurance program, and benefits and discounts that more than pays for the membership of most of our members, meaning it's actually costing you money to not be a member of Investor Fuel. If you're looking to scale your business and build a business that allows you to live the life of your dreams, please visit investorfuel.com today and book a call with our team.
You should at least be familiar with the market where you are to look at the opportunities to understand, go put your hands on the properties, go tour some units, go meet some brokers. Now, if you're new, don't expect the brokers to give you the time of day and, sit down with you over coffee. Be honest with them. Tell them you're new. Tell them, hey, look, I'm getting started. And look at their deal when they come out with an OM and read RTFO. That's like, I don't know if you're familiar with the internet, RTFM, read the effing manual. In this case, it's read the effing OM. The brokers put a lot of time and effort into creating those offering memorandums, and they will answer a lot of your questions. And if you don't understand something in it, call the broker and go, hey, I see here on the water expense, you use the T3 versus the T12 number. Why did you do that? They actually love questions like that because that tells them that you actually took the time to dig into the OM and that you're starting to understand it. And if you don't understand any of those words I just said, you need to go back and become familiar with what a T12 is. It's a financial report that shows the trailing 12-month history in all the different expense categories.
Now, right now specifically, I know there's a lot of distress with operators, and so because that is the case, I'm also thinking, and I could be totally off base here, that some of these properties may be in actually great condition. There's just distress, on the financial side from the operators. So does that mean that there's maybe less value add opportunities right now, whereas you're really maybe able to acquire a property because the operator is distressed and not necessarily the property itself?
So when you're looking for distress, it falls into three categories. You've talked about two of them. There's the financial distress, there's operational distress, and then there's uh, more of a, uh, I guess, for lack of a better term, environmental distress, where the market in general is you really want to get out of that market. We've never seen that here in DFW.
Right.
Now there may be little pockets of it here and there, and again, this goes back to why you've got to learn your area. There are parts of Dallas, like the mid cities area, which is where most of our properties are. And the mid cities area is located exactly where you think it would be. It's between Dallas and Fort Worth, and it's a great area for a whole lot of reasons. We don't have time to go into all of their virtues today, but there are also parts of Dallas that I would never invest in, at least not today. And that's just because of, the economic situation where they're at. We have very clear criteria. And that's another thing. If you're new, you need to figure out what your criteria is. Unless you have a construction background, I wouldn't recommend that you go chase heavy value adds, which is what we do. They're a lot of
Yeah.
work. You need to, I would say, if it's your first foray into multifamily ever, start simple.
If you're looking for consistent, high-quality leads, look no further than Investor Machine. Investor Machine isn't just another agency, it's the most sophisticated, data-driven lead generation company on the planet for real estate investors, and serves the role of being not just a lead generator for your business, but a marketing partner that is helping you achieve your goals along the way. Go to investormachine.com to learn more and schedule a call with our team today.
You don't have to have one that's going to be, you know, 2 or 3x your investor's money or even your own money. Get in, learn the ropes, and ideally, find somebody, a coach, a mentor, somebody. I'm not gonna promote any of them. There's a ton of coaches out there. Some of them good, some of them not. Do your own homework. I had a coach. It helped me out a lot, kept me from making some mistakes, but it also got me into a community where I met my current partners with Kraft Capital. And so that's another advantage of, some of the coaching programs is really the community as much as it is the coaching and whatever services they offer.
Now, I know you're focused on DFW, right? And so for folks who are outside of DFW and thinking that they can invest in DFW or even out of state, right? And there's a lot of that. To
Yeah.
me, I almost wonder like how, and again, I'm not saying this like carte blanche, like this is always true, but I feel like you're in a way um setting yourself up for tough times ahead because you're competing with folks like yourself who this is their backyard. They understand the market like intimately. And so I don't really know how people can be effective operators unless they have a partner who's there on the ground when you're looking at these larger deals.
Well, and you hit it right on the head, Dylan. You've got to have somebody on the ground. I was invested in a deal as a limited partner on a property out in Tyler, and it's a great team. Well known people that they didn't have anybody on their team that was local. They didn't know and understand that market like they thought they did. We ended up losing 91% of our capital on that deal. Yeah. So again, this kind of goes back to you got to know your market, you've got to know your tenant demographic. Um, you know, if you're out there in Tyler and your tenant demographic is a bunch of good old boys that like to hunt and fish and drink beer on the weekends, you're not going to be raising their rent 3% every year.
Yeah.
Because every time they get a raise, it goes to beer, fishing, and hunting equipment. It's just a fact of life. I mean, and I grew up in the hills of Tennessee, so these are kind of my people. I know them.
I'll pivot a bit here. You know, Tyler, I mean, depending on the way you look at it, I know a lot of single family investors that might invest in, Denton, but they'll look at deals in Tyler. But then when you're dealing with economies of scale, right? The upside is higher, but then the downside is lower as well. For folks who are using, let's say, like property management companies,
Mhm.
um, is there a number of doors where you would recommend someone have before they start looking at that? And then also as well, is there maybe a downside from uh, outsourcing that completely and not having that be someone in house?
There's about 20 questions in all of that. Um, so for property management's great. If somebody's getting started in single family, I get it. That's you can't go out. You don't have 100 or 200 grand to go and invest in a multifamily deal. Um, you know, Learning and doing the single family thing is great. You get to learn about all of the headaches of leasing, all the headaches of maintenance, and what you've got to remember with multifamily is those headaches for one house are multiplied 100 times in a 100-unit property, maybe more, um, because you've got 100 houses under one roof is essentially what that is.
If you're a new or newer real estate investor looking to launch or grow your real estate investing business, please check out Investor Fuel Club. It's a coaching community, but unlike anything you've ever seen before. And you can actually partner with members of our mastermind from coast to coast on deals right in your market. There's no better opportunity to build a consistent business than to literally partner with pros to help you avoid costly mistakes, avoid the need for capital to do deals, and help you eliminate your fears as you're starting your business. Learn more about Investor Fuel Club at investorfuel.com/club.
Outsourcing your property management is great when you get to the point where you can't handle the day-to-day
Right.
leasing, the day-to-day maintenance calls, the day-to-day whatever calls that, residents have. Uh, Sometimes they just wanna call you and talk. Uh, you know yeah, I'm serious. We've got one of our properties, we've got a guy that he's been in the same unit for, I think, going on 30 years now, and every morning he comes into the office to give a report of what's been going. He's better than a security system. The guy, he knows everything that's going on the property. But he comes into the office and sits down and chats with the property manager for 10, 15 minutes, and then he goes back and goes on his way.
Yeah, that's part of his routine. I like that guy. He's like you said, better than a security system.
Yeah, yeah, and he doesn't want us to update or fix or anything in his apartment. Now, if something breaks, he wants it fixed, but he doesn't want to add a new ceiling fan, doesn't want us to paint, doesn't want us to do new flooring. He doesn't want his stuff moved. He's set in his way. That's fine. We but anyway, um, property management is great. The number of units is really going to depend on the property management company.
Mm,
There are some property management companies that specialize in single family property management, and some of them will do as few as, one property. The most commercial property management companies, they really don't want to deal with anything less than about 50 units
yeah.
because they want to be able to have a full-time property manager on site. And less than 50 units, it's hit or miss on whether um, it'll support a full-time property manager. Because one of
Yeah,
the things you gotta yeah, I was
I've
just
heard
gonna
that
say, one of
before
the things you
too.
gotta remember. Yeah, you've gotta remember you're paying that person's salary. That comes out of the property budget. The property management does not pay their salary directly.
Yeah,
They
you got to.
manage all of that for you. Yeah, they manage all the accounting and everything for you, but the money comes from your property operations.
Yeah, and one of the things about these properties, I've heard this from other investors, is like the level of effort to buy and manage 30 properties is not so dissimilar from 50 or 70, right? And so if you're gonna buy 30, you might as well do 50, and that may be counterintuitive for folks who may be thinking like I gotta stair step my way into larger multifamily
Yeah,
investment, especially coming from like the single family space, but
yeah.
you're buying yourself a whole job if you're going to be managing these deals yourself.
Yeah, and one of the big cautions I would recommend is that, when you do get a property management company, you still have to manage the property management company. You know, your role moves from day-to-day property management to asset management, and it's a different focus. You still have to look at the books. You still have to make sure that they're accounting for everything. You gotta make sure that that on-site, you know, isn't taking your money and rat holding it away somewhere. That I've never seen that happen, but, I've heard stories of it happening.
Yeah, I mean, it certainly does happen. I think choosing the wrong property manager can certainly be a deal breaker, right? It can
Oh,
distress for sure.
yeah. I mean, and even changing property managers is difficult. And the deal I was telling you about out in Tyler, they did a retrospective after everything was said and done, and one of the things they realized that they had done wrong was when things weren't going the way they wanted. After about 3 months, they changed property management companies, and you would think, well, that makes sense. The property management's not doing what you want. Instead of working really hard with the property manager to go, hey, look, we got to fix this. Every time you change property management, you're going to lose probably 2 months of momentum because it's going to take time for that new property management to come in and get things set up, get the people familiar. You know, uh, now there's nobody in the office that the tenants know or recognize. And so it's a disruption to everybody's routine. And a lot of times you don't think about that.
Yeah, you're just thinking, let's get the new man on deck, get someone off the bench, and that's another delay, in operations. We are coming up on time here, though, Shawn. Any new projects that you're working on, and then also as well, what's the best way for folks to reach out to your team if they're interested in reaching out?
Sure. Yeah, absolutely. So we just closed on a property back in September. It's a smaller 104 unit property in the Irving area here in Dallas. It's about a $2 million rehab. So we're a little over halfway through the rehab on that. Um, that's our current project. And then we're still screening properties. We've looked at close to 40 properties this year since the first. Um, and so, I mean, we're looking. We're continuing to look. We're being very selective, which is why we screen a lot of properties. Um, but yeah, that's kind of what's. I mean, no great revelations. It's like if if you're doing single family, multifamily, doesn't matter. You got to go through and look at all the deals. And the way we're able to look at that many properties quickly is we have, screening criteria, which is why I said earlier, you need to really understand what is your buy box. What what makes a good property for you?
Yeah,
What yeah, because yeah, because what makes a good property for me may not be the same thing that makes a good property for you.
Yeah, I mean, I've this is on a very granular level, certainly not the multifamily scale, but an Airbnb host told me like, hey, if you're going into short-term rentals and you don't like being a host, that may be a problem. If you don't enjoy hosting people, even though you're not waving hello to them, you're going to be dealing
Well,
with them all the time.
yeah, one of our partners has several luxury Airbnbs here in the DFW area, and he doesn't host them. He's got somebody that he hires that is a highly rated Airbnb host that manages, the hosting for his properties.
Yeah, it's definitely one of those things. Shawn, again, thank you so much for your time today. Thank you for coming on the show.
Yeah, sure. And to answer the last part of your question, if people want to get in touch with me, they can go to our website at craftcapitalinvestments.com. That's craft with a C, investments with an S at the end.
Thanks for joining us for today's Real Estate Pros Show. You can learn more about the amazing benefits of the Investor Fuel Mastermind community, including surrounding yourself with hundreds of other rock stars, 100% financing for your deals, and members-only discounts from vendors you're likely already using that, as a member of Investor Fuel, will save you more than the cost of your membership. Visit investorfuel.com to learn more. If you're interested in joining us as a guest of this show, please visit investorfuel.com/pros to apply. You can also check the show notes for access to free resources, how to get access to world-class lead generation, and much more. Don't forget to subscribe so you never miss another episode. Have a great day. We'll see you on the next show.